Hey everyone, welcome to another video on my channel, and today in this video I'm going to tell you how you can try to pick trending stocks systematically. Generally what ends up happening is when you sit in front of this trading screen, just for the sake of entering, we often tend to pick random stocks. We tend to see what is performing well in the last 2-3 days, what is coming into the news, what has some positive news flows, and we just randomly go and pick the stock. So whenever you're doing swing trading or whenever you're doing short-term trading, you can actually try to use these following steps to ensure that you have higher probability of making a profit. So whenever you're trading, you should always ensure that no trade comes with 100% chance of success rate. So anything that you're doing always comes with a probability. Whenever you're taking the trade, the idea is to have the highest probable chances of making money. Not every time that you are going to follow a particular set of rule, it is going to ensure that you are going to end in profit. But following a systematic way will also ensure that you can increase your chances of ending your trade in a profit. So I'll be telling you how you can screen your stocks, filter your stocks, plan your entry, plan your exit, and measure your risk to reward. So we'll be covering all this in today's video. Before moving on, in case if you're liking the content on this channel, make sure you hit the like button and subscribe to my channel because I'll be coming with more such content moving forward. And I would also like to tell you one more thing. In case if you're interested in learning systematic way of approaching market rather than randomly trading, so we do have a 2-day workshop. So this is an extremely personalized workshop where we'll only be taking 5 people per batch. So this workshop is going to be very personalized, where we'll first try to understand ye as a person, your relationship with money, and accordingly we will help you design systems both for equity and options. So we have got really positive reviews for the same because it is so personalized. In case if you're interested, you can go to QuickAlpha.in or simply click on the link in the description below and you can book the seat for your workshop. Now with that, let's quickly move on to the video. So right over here, I'm going to just take an hypothetical example. So this is in no way a recommendation. Even though I'll be using the recent data, so none of it is a buy recommendation. So I will avoid using any name of the stock and I'll just be showing you the glimpse of it. So the very first thing for this approach is whenever you select a stock, you try to understand how is the overall index performing. So what do I mean by index? If you are picking any IT stocks, let's say Infosys or TCS, you should have an idea how the IT index is performing. If you are picking any stock, let's say for example TVS Motors, Eicher Motors, you should have an idea of how the auto index is performing. And similarly, if you are picking any defense stocks like PDL or PEL, so you should have an idea of how the entire defense sector is performing. So in this example, let's say if I'm using a defense stock, so the very first thing I'll be looking at is how the index is performing. So you can see the defense index got listed somewhere in 2024, and during the time of India-Pakistan war, we saw a big run up in the defense sector, and later there was a steep correction. Now the entire index is consolidating. So here, assuming that you want to buy a stock, you feel that the stock has actually given a breakout. So what is more important is also to go by what the sector is actually doing. If the entire sector is rallying, then you are very likely to get a stock, or let's say the stock which you are picking is actually going to do well. If the sector itself is underperforming, very likely you are going to see that the stock might actually give false breakouts, or even if the stock is giving a breakout, it might not run up quite a lot. So to avoid this, you can simply go by trying to understand how the entire sector is performing as your first key point. So now assuming that you find that the sector is performing well, so it is consolidating and it is ready for the next breakout, entire sector altogether. So let us say I, for example, just pick an auto sector, and you can see that auto sector is doing really well when you compare it with the market, and it is on the verge of giving a fresh all-time high breakout. And if you were picking a stock from this particular sector, so you should initially start by looking at which is the strongest stock available. So I don't want to give any recommendation. I'll just go back to the defense sector alone, right? So I'll also hide the name of individual stocks so that this will be as per the compliance. So now this is the first stock which I'll be scanning. So when you take a look at this stock, so when we see with relation to the index, so index when it corrected came down nearly around 20%. So we are going to see when this correction happened, how much was the stock coming down. So even this stock came down around 15%. So during this similar time of correction, so this particular stock came down close to around 20% again. So you can go stock by stock and see during the time of correction how much the stock really came down. So it doesn't matter what was the peak. So you're actually trying to measure the relative strength. So this stock was down nearly around 30%. This stock was again down nearly 15 to 16%. So what you want to avoid is the stocks which have corrected more than the market. It doesn't matter if they have run up much more. So one thing that you have to understand is you want to select a stock which is showing relative strength when compared to the index. I am not telling you to buy the stock right now. So later on, if you were to enter any stock also, so you can see what is the way in which you can start scanning. So once we understood how exactly the stock has performed during the stage of the correction. So then we also want to know the general trend of the stock. So when you zoom out and see, so you can see this particular stock X is in a steady uptrend. During April 2025, this had hit a new all-time high and then there was a 15% correction. So if you take a look at the second stock, so the second stock, when you take a look at it, now you can see it is not in a steady uptrend. There are wild swings. So I'm using a larger time frame just to understand the trend of the stock. So it is quite volatile. You have seen big rallies in the stock, big correction in the stock. So these are some of the stocks which maybe I would like to avoid because I am not able to see a steady trend in this stock. Now let's say I come to the third stock. So even this stock has seen bigger corrections, huge rallies in a very short span of time. So even this chart structure is something which I might not like the most. So maybe if I get a buy call in this stock, I would avoid, and especially the correction from peak to the bottom is nearly around 30%. So now let's go to the fourth stock. So this has seen relatively better trend. So you can see that the uptrend usually continues, but here we have seen some massive trend where without stopping even for a week, the stock had nearly doubled. So this is another stock which has not given a fresh breakout around 2025. So remaining all the different stocks, so from top to the bottom list, everything had given a fresh breakout around the period of March 25. So now when we take a look at all these stocks, the first thing that I would be most comfortable entering in this case is the stock number 1, so which has shown a steady uptrend even historically. So the second thing why I would be picking stock number 1 is it had given a fresh all-time high breakout during March along with all the stocks, and when the market corrected, it corrected the least, and when the stocks were about to bounce back. So now some of the different stocks are bouncing back. So when you look at this performance, so it is up by nearly around 14%. So now the third reason is simply when you take a look at from the high, this stock is just hardly around 4 to 5% away. So when you take a look at the second stock, so this stock is well over 10 to 15% away still. So the third stock is further around 10 to 20% away, and the fourth stock is again down by almost around 10 to 20%. So one thing what we are seeing is the stock number 1 is having a steady uptrend. When the market fell, it fell the least. When it is bouncing back up, so you can see it has done relatively better than all other peers. So take any peers from 2 to 5, it has done better than all the peers. So one thing that you can establish from this is that this stock is having a steady uptrend and relative strength. So the relative strength of the stock is much better than most of the other stocks around. So if I were to make any entry in defense sector, so I would most likely be making entry in stock number 1. So would I be making it right away? The answer is no. So maybe before I enter the stock, I need to see some steady trend in the sector as a whole. So it should be consolidating, it should be on the verge of giving a breakout, or at least if the sector is doing well, the stock should be near or close to all-time high. So this is when I would actually select a stock. So now let's go back to stock number 1, how I would be planning my entry. So this stock, so I'll be just taking the price because anyways I have hidden the name altogether. So this stock I would be looking to enter anywhere around 335 to 340 if there is a strong breakout coming out of a consolidation. If the breakout happens immediately, like sudden big candle over, maybe I would avoid. But if the same breakout, rather than breaking out straight, right? So if it consolidates for a while, let's say it consolidates and then finally gives a breakout somewhere over here. So these are the structures which I would prefer more, where the company or a stock is coming out of a proper, steady, consolidated breakout, right? So if this happens, so my trade setup would be quite simple. So I would be entering the trade with initially around 5 to 10% as my SL. So the most important thing is whenever you're taking a trade, you should size in a way. If you're losing 10% of that trade, so you should be okay to take the risk, because you'll be taking multiple trades. So this is not the only trade you will be taking. So let's say you're taking 10 trades as a whole. If all the 10 trades you take the SL of 10%, so very likely you are going to get hit by 10% of your portfolio. But generally what happens is purely because of probability. So you will not be getting hit with 10% with all the entries that you make, right? So you will be getting hit much lesser than that. So why I am keeping a 10%? So it is just a good initial buffer to start off with, even if it is a fake breakout. Since the stock is showing some relative strength, it is a good buffer to initially start our trade with. So the next question is going to be how we are going to continue with our trade. So assuming that the breakout has come right over here and we have made the initial entry here with 10% SL. So now it can continue in multiple ways. It can consolidate right over here, and again it can give a further breakout, or it can go up further and again trend and further give a breakout. So now what I would be doing is I'll be looking for next consolidation and breakout, assuming that here it consolidated and finally it broke out here. So another breakout has come right over here. In such cases, what I would be doing is I will be simply shifting my SL from this level. I'll be shifting my SL from 10% away directly to my cost level. So I'll be changing my SL from the initial 10% away to the cost level, which means my SL is now at cost. As in when this pattern continues, as in when the stock is breaking out and the trend is continuing, I will slowly start to trail my SL slightly higher and higher. So this way, very quickly I'll be able to reduce the overall risk of that particular trade and aim for higher returns. So initially, whenever you enter the trade and you put a say 10% SL and you're looking or aiming somewhere around 10 to 20%, your risk to reward by default is 1:2, plus you're having a higher probability because you're going with a stock with relative strength. So now, as in when you start bringing up your SL and reducing your risk, so your risk to reward for the trade automatically starts to increase. At one point, you will also reach a point where your stop loss now is going to be way above your purchase price, which means you're not going to end the trade at a loss at all. So this way, as in when new breakouts happen, so you can simply start shifting your new SL to the price above the previous support. So this way, as you're doing it, so you will also find out that initially the idea of the entire trade is to pick trades which have a higher probability of success. The second thing what we'll be doing is we'll be picking a trade such that we have a higher risk to reward. And finally, as and when the market moves in our direction, we'll start reducing the risk. So automatically the risk to reward on the overall trade will start to shoot up. So this is a simple framework what you can use. So not just in this stock, so you can go with any sector. So let's say you feel like entering a particular stock, just scan through the entire sector, see which other stocks are exhibiting much more relative strength, much higher relative strength, how the entire index is doing, and then you will be able to identify really good stocks later on. So this is a general gist of how you can use this as a framework to select stocks. If you want to know more, if you want to learn a much better systematic way, you can also enroll for learning path using the link in the description below. And that's for the video, guys. I hope you enjoyed it. I hope I was able to add some value to you guys. So if you have liked this video, make sure to hit the like button, share this video and subscribe to my channel. Thank you so much for watching and see you soon in the next video.